Anshul Saigal. Good morning, Ji.
Good morning, Nikul bhai.
2000 points on the Nifty, bolt out of the blue. What could be at play now? Could it be profit booking, or there is still a lot of FOMO in the system?
Nikul bhai, if there is one thing which I've learned in my 20 plus years of investing in the equity markets, it is that trying to predict direction is a futile exercise. In general, I mean, for the long term, what is better is to just seek companies where a risk reward is favorable, where you have an arbitrage in valuations, and where businesses are such that if you were to hold them through volatility and valuations are reasonable, then you will over a period of time make significant money. And when the markets give you this opportunity, sometimes one liners from the great investors are a book in itself. One liner which I always hold close to my heart is from Druckenmiller, when he says that when the odds are favorable, go for the jugular. What he means by that is that when the odds are in your favor, take the stocks and the asset class that you're looking to invest in by the throat and load up. I think that I don't know whether the direction is going to change in the short term, 1 month, 2 months, 3 months, or what. But when I speak with companies and I listen to their commentary on outlook for the next 3, 4, 5 years, they are just so bullish that I find no reason to worry about the next month, 10 days, three months, or whatever. And I look to invest for the next 3 to 5 years, where I have very little doubt that this market is going much higher, and some of the small and mid caps are going to be multiples of where we are. So I'm not so worried about the next tick or the near term. I think that this market for the long term is a very attractive market to be invested in. Of course, it depends on each individual whether they can manage psychology accordingly. Some cannot, and which is why people like us who have been in the markets for long have arbitrage opportunities and have opportunities to make money.
The one segment which is going to be extremely critical today, and some of these stocks have already moved up. Look at IREDA's chart yesterday, and here's the reason why. RBI last evening has revised the priority sector lending guidelines. Among other, the housing loan limit is now up for PSL coverage. Renewable energy sector has been redefined. Weaker sections borrowers list has been expanded. Capital on loans by UCBs to individual women beneficiaries has been lifted, and new guidelines are going to come into effect from April 1st. So when you talk about the entire renewable energy space, the three stocks that you need to keep on your radar are PFC, REC, and IREDA. Firstly, look at IREDA because that stock jumped up a mammoth bit yesterday itself. It was an 8.5% surge that you had on the stock. Okay, I stand corrected. Eventually, it closed in with almost a 10% gain. So good going for this one. And PFC, REC being the other two stocks which are also going to be beneficiaries of this particular mandate by RBI. NTPC, like Kunal of course mentioned, has been going very strong. There's been Adani Green, there's been Torrent Power as well. These are all beneficiary power ancillary plays which have been looking strong. Anshul, what are your own thoughts on how to capitalize best on this entire power demand?
Morning, Aisha. So, as regards power, clearly, if India is to become an 8 trillion economy and then move to 20 trillion and 40 trillion, then it cannot be without power powering that growth. And power, as a result, is going to be a key, investment theme over the long term between now and say the next 5, 10 years. There are many ways to play that. Of course, you can play the power generators, or you can play the downstream or upstream plays on power. For instance, there are coal providers whose volumes will become far greater than where they are today. There are also financiers of power whose books will grow materially from where they are today. So there are multiple plays on power. There are also downstream plays like transformer plays, etc. So I think that this is a theme which will have many streams to play over the next few years, and it offers tremendous opportunity. And in the recent correction, many of these names which were trading multiples of where they are today are down. Many are down as much as 50-60%. So valuations have caught up to reality, and in our judgment, that offers opportunity as well. Some of these stocks were highly wanted in the previous rally, and with this correction, valuations are favorable. Hence, we think that this is a very attractive place to be in for the future.
Graphic which says 2024 and beyond, right? So 2024 or 2021 to 24, Anshul Bhai, what did well was PSUs, defense, railways. 2025 beyond, the leadership of the market will change, because every time then the shakeout in the market, leadership of the market will change. Where do you think the next leg of leadership will emerge? Can you be more specific there? Rather than saying power, if you can say it could be power transmission. Rather than saying autos, you could say two-wheelers. Rather than saying manufacturing, you could say EMS. I mean, you get the spirit of my question.
I do, Nikunj Bhai, and that's a very valid question. I think that is what all investors are grappling with. What I've realized over the years is that leadership arises where ownership of a sector or stocks is low, and that combines with valuations being reasonable. Typically, that is a space which nobody is talking about today, and people will be talking about tomorrow. So we as investors need to really sort of game where investors will be focused in the coming future. In our judgment, that space is consumer discretionary at this moment. Why I say that is that if you look at the consumer discretionary space, for instance, take the footwear space. Many of the stocks over the last 3-5 years are down as much as 60-70%. And that fall had happened prior to the recent last 6 months fall. So while our markets were in a bull market of their own, this space in general had seen a significant downturn, and stocks were down materially. Take the paint space as well. I mean, that space was again, I mean, there were marvelous investors who were out on the street talking about one large company in the paints sector, rising to the moon. And we have seen that that large company in the paint sector is down half from recent highs, highs being made 4-5 years back. These are all consumer discretionary spaces which have corrected materially. These are spaces which nobody has focus on today, where valuations after a really long time have become reasonable, and where the future bodes very well for these spaces to be multiples in terms of the businesses or where they are today. Now, if you add all of those things together, I think that we are in a very attractive period to accumulate these stocks, even for instance, value retail. And in our judgment, next year and beyond, leadership will be from this space.
I agree. I so agree that this entire quick commerce, order karo, jaldi lo, I think it'll change. Delivery charges are coming. Competition is intensifying. Everybody wants to just go for those fat, market cap which the P market and the public market have created. We've seen that happen, that when a large market gap gets created, competition intensifies, and it really busts that space in terms of wealth creation. I'm scanning through some gainers, and not too many, Kunal, actually. Nothing which could be, it's so amazing, Kunal, that markets have gone up 2,000 points approximately, and you cannot, beyond, with the exception of 4-5 stocks, you cannot put your finger on this that arey itna bada move isme aaya. Nothing has gone up 40-50%. Nothing has gone up. I mean, we've not seen a crazy move yet, despite a 2,000 point or almost a 7-8% rally on the Nifty.
Kotak would
No, I
have,
think
right?
there are a few large cap
Yeah.
names actually.
Maybe I
Kotak I
missed
think
it.
is up 20% from on a YTD basis and 12% I think on a monthly basis.
Which I missed. My data
Big
is that
move in
my data,
Kotak.
what I have, at least what I have is, I'll have to
Even
do a
ICICI
deep
Bank
dive.
in that sense, I think from
I
1200
don't
to
have
now
that
13,
data.
40 plus.
My bad. I don't have. No, I mean, for me, it's NTPC, which is a 15% from March low.
Yes.
I mean, I'm saying, like when you
Kotak,
see,
22% almost this year.
it's
so far
outperforming.
this year.
It's outperforming.
Yeah.
See, this is how tight
Also
turn,
because
it's like-
ICICI Bank didn't fall so much, right? For Kotak, the swing, of
Correct,
course, has been
correct.
higher.
And that's how tight turn, right? Everybody had given up on Kotak. New management, they're getting the technology wrong. They don't have the ability to lend. They are getting obese. You don't know what the new CEO will bring on table. He comes out, says, okay, I'm going to grow. I'm going to grow unsecured. I'm going to start taking risk. The RBI issues are sorted, one good number, and then, wow, it's like Bala moment. Anshul Bhai knows Kotak Bank very well. Yes. Tell us, sir.
It's the internals of the bank and the institution are rock solid. They were going through certain cyclical issues. In our judgment, those issues by and large were in the price with the 4 or 5 years consolidation. A bank which used to trade at over 4 times book had fallen to as much as 2 times book and slightly below that. And as I mentioned, ownership and expectations both were low in this bank. These are recipes for a turnaround, and we've seen a bit of that turnaround just now. Also, as we all know, this is part of that Ritik category of stocks, which performs quite well when the markets are jittery. And that play has happened in this name in recent times when the markets have been jittery. Also, like you, Nikundbhai, rightly mentioned, the 3 4 points that you rightly mentioned regarding growth, RBI issues being behind, and other risk-taking parameters being favorable for the bank. Um, all of those things have combined for the stock to actually have done well. And again, this is, as I mentioned, the risk management of this bank is, head and shoulders ahead of many of the other banks, and so it will survive for the very long term. And if you are a patient investor, this is a generally a good. I mean, this is not a recommendation, just a case study, but this is a good space to be in for the long term.
Anshul Bhai, there is this whole fear that Birlas are moving into this entire wire industry. That means more competition. Adanis may put in their, through their ring in the hat. That means additional competition. Is it a good time to buy the fear and let's say buy some of these wire companies, K Industries, Polycab, Apar, and for that matter, even Havels?
Goodbye. I remember we were buyers of Polycab in sometime in 2018-19 in our portfolios, and that time the stock used to trade at 15 times earnings for a company that was growing, and it had given guidance of growth of between 15 and 20 on revenue. Now, that seemed like an anomaly, and that anomaly got corrected with the stock valuations going from somewhere close to 15 times to as much as 50 times, and maybe even beyond. Now, at this kind of a re rating, and this happened across the board in the cables and wire space, there is very little room for a surprise and for error. And in this environment where one company is saying that your market cap is my opportunity, you are seeing that this company is coming into the sector. Not only this, it has gone into another the paint sector as well. And as a result, valuations have corrected a little bit, but in our judgment, till the dust settles, and we have somewhat of an example to go by. In the paint sector, the dust took really 3 years to settle, and it has still not settled. This is early days in our judgment at these valuations. There's little room for upside. There will be some time before this sector comes back into its own. And in that interim, it will really sort of tire the investor community. So this is really, I mean, we are too early in this game to go in and buy. One will have to just stand on the sidelines and wait for the dust to settle.
Anshul, so good chatting with you today. Thanks for your time as always.
Thank you. Thanks, Aisha. Always a pleasure.
If you like this video, then like, share and subscribe to ET Now.